Gang, right now the markets are moving higher again. Earnings are better than expected, Fed data is better than expected, and China is cooling off. What does that mean? That means we have an amazing time for pullback opportunities. And in today's video, that's what I'm going to show you, how to take advantage of short-term pullbacks. Now, I want you to register for an amazing video. I created a 2-hour class that talks about pullbacks in great details. It'll give you everything you need to trade pullbacks the right way. Register below this video. Now, let's get into the labs and talk about short-term pullbacks. All right, we're back in the lab, and today we're going to talk about low-risk pullback tactics. Now, why are they important? Why are we talking about them right now? Some sectors right now are making 60-day highs. Earnings are slightly better than expected, employment data is better than expected, and markets are shrugging off China, and that's huge. And some of the sectors that were first to pull back, like semiconductor sectors, are trading higher. For example, Intel made a 2-month price high, okay? That's significant, and that tells us price is going to move higher. But we're still in volatility mode, and we're seeing pullbacks, just like this pullback against the trend in Intel. So how do we take advantage of these pullback opportunities against the trend? What I want to see is price trade 25 cents above the high of pullback day. Now, the pullback happened on the 25th of January. So in the next session or two, if price trades higher by about a quarter, we'll go long. And before I get into the stop loss and the profit target levels, keep in mind, this video is just an appetizer of what I created in my interactive pullback class. You definitely don't want to miss it. It's online for a limited time only, and I urge you to sign up now below this video. You'll get access to some of the most actionable low-risk pullback tactics that you can apply right away. Now, let's get back to our Intel pullback example. So, getting back to the protective stop loss level, once we entered the trade about 25 cents above the high of the swing low day, we would put a protective stop loss about 25 cents below the swing low. And if the price breaks below that level, we would just exit the trade. And the reason these pullback opportunities are so profitable is because of the low risk. And that's the beauty of these low risk trading opportunities. We'll know right away if the trade is not working out if the price action breaks the swing low. And that's what I love about these short-term pullback trades. They offer very low risk profit opportunities. If the price action breaks the low by 25 cents, we're out of the trade and the trade is no longer valid. Now, before I get into the profit target, I want to make sure you're not letting any of the yammering, blow-dried pundits on cable news distract you from your focus. I always wonder why some traders worry about volatility. For us, it's a wonderful thing. We don't panic, we profit. There are still tons of opportunities out there, and I'm holding a special training event to show you how we'll seize it using high-velocity pullbacks and options. Sign up now to learn my strategy to determine exactly which trades to enter, when to start buying, and how to stack profits while others stress out on the sidelines. By the end, you'll know more about trading pullbacks with options than 99% of traders out there, so don't miss out. Spots are filling up fast, so register now below this video. I'll see you there. Now let's talk about profit targets. What you do is very simple. You double your risk on the trade, you figure out where your entry is, and you figure out where your stop loss is. You take your risk, the difference between your entry and your stop loss, and you double it. And then you add it to your entry price, and that's your profit target on the trade. Talk soon.